Nothing comes close to Celebrity Cruises' big New Year sale. Explore the Great Barrier Reef, New Zealand fjords, Fiji and beyond, right from your own backyard. And with 29 restaurants, bars and lounges to try on Celebrity Edge, if you crave it, we have it. Book now and save up to 75% off your second guest. Plus, save up to $900 per room. Visit celebrity.com.au or contact your travel advisor. T's and C's apply.
27 minutes to 10 on 3AW. It's a delight to have Michelle Galvin, Director and Financial Advisor from Acorn Wealth, in the studio. In lieu of Dominic Alafacci, we've welcomed in Michelle to take your calls on 133 693. Michelle, thank you for coming all the way in.
Thanks, Emily. It's an absolute pleasure and quite exciting, actually.
Oh, great. It's your first time on the program and it is delightful to have you. You've got some great topics, but we'll tick off a couple of requirements here. Michelle's AFSL is 230323, and the information provided today is, of course, general in nature. And before making any financial decisions, it's really important that you seek independent financial advice from the team, say, at Collins House or Acorn Wealth or others. On 133 693, we welcome your phone calls with questions for Michelle about your personal finance. Now, Michelle, run through a market update for us. Let us know how things closed out.
Sure, Emily. Overnight, we saw the US Dow was tracking down 402 points, sitting at 42,945. That's amid a year ending taking profits and selling down for tax. The Nasdaq also suffered falls around 2%, landing at 19,712. The broader S&P 500 also falling by 1.4%. Across the Atlantic, European stocks were all up overnight, with the FTSE slightly up at 8149. Gold trades up by 0.7%, landing at $2,635 per ounce, with crude oil up 1% at $70.55 US. In Australia, the All Ordinaries continued to push up 48 points to finish at a close of 8521, and the AUD is still trending down at 62 cents against the greenback. Not great for those taking holidays.
No, not at all. And look, it's a great time to take stock of our finances, and that's what we're going to do together over most of our next 25 minutes through until 10 o'clock on 133 693. Michelle Galvin from Acorn Wealth is a financial advisor, and she's a director of Acorn Wealth and is here to take your calls. Let's take stock, Michelle. Cost of living crisis, it was probably the phrase of 2024, but it compelled all of us to have a look at where our money was going and where we needed to cut back and clean up. Let's go through some of your key ways that we can tidy up our finances in the new year, Michelle.
Yeah, absolutely. Well, around the Christmas dining, there was a lot of talk about New Year's resolutions. I'm going to lose weight, I'm going to start running, I'm going to do this and that. Nothing really financial, which was quite surprising. So I thought we would have a little chat about some quick wins that we could do into the new year that really can make long-term differences.
Yes.
And a quick one is just with mortgage repayments. You know, that seems to be a really big topic of conversation. Most people are paying their mortgages monthly. Just a quick win is just changing that to weekly, and that can save a little bit of interest but shaves years off your mortgage at the end, which is also great. Back in the day, we used to have these accounts called Christmas clubs where,
yes,
mum and dad would put away $10 or $20 a week.
That's
and then
right.
At the end, the big turkey would come out and be paid for. So I think we need to kind of look at reintroducing something like that where you can put $10 or $20 or even $50 a week if you can afford it. It just takes the heat off at the end of the year for that big shop.
It's such a good idea. On mortgage payments, I'd like to talk about both of those points. On mortgage repayments, what about refinancing? I mean, there's a little bit of paperwork to do, so you do need to take, a day out of your life to sort it all out.
Absolutely.
How often can you refinance? I've done it twice in 4 years that I've had my apartment. There's no harm in continuing to do it, or does it Does it affect your credit score if you do bounce around? What's your take on it?
Not at all. Like, I'm all for looking at everything like that. So if there's any money to be saved with refinancing, you should absolutely look at it. There are a lot of banks that offer honeymoon deals when you move across, incentives to move across. And that's not only for mortgages as well. It's also good to look at your insurance premiums and all those sort of things that you can save money. I'm all about that. If there's a dollar that can be saved by doing a little bit of work, although mortgage refinancing is a lot of work.
It is.
But it is a day.
But it's worth it.
Absolutely.
'Cause it's such a big chunk of our salary. And
Yeah.
anything, $50 a month, $100 a month, it's better off in your pocket.
Absolutely.
If you
And,
can.
we've helped many clients refinance this year, especially with the cost of living crisis. And that could be reasons for extending the loan term, which you can't really do with an existing loan, but you
Right.
can if you refinance. So all those little things do help.
Yeah, Michelle, we've got calls for you. Kevin, you're
Sure.
talking to Michelle Galvin. Welcome to the show.
Good morning, Michelle, and thank you very much for your time.
Hi, Kevin. How are you today?
Oh, not bad for an old bloke. I'm inquiring about a term investment.
Sure.
I've got one due with Bendigo Bank, and they're going to refinance that at 4.5. I'm
Right.
trying to get better than 4.5 government guaranteed.
Sure.
Can you help me?
Absolutely, Kevin. The government guarantee, of course, is very important when we're looking at term rates. There are a lot of companies out there spruiking, the 6% and 7%. Always be careful of those. I'm all for
Yes.
staying with the big banks. What we're finding at the moment is that the shorter term rates are actually better than the longer term rates. So you might have to perhaps consider a 6-month rather than a 12-month. I can't really recommend any banks that you should go to, but, you can go to the websites of the banks and you can compare. I have seen some as high as 5.05. You can look around for those. Just again, that government guarantee is crucial. I have been around back in the day where people did lose a lot of money through the pyramid and,
Yes.
I don't need to
Yes.
say any more about that.
No. And the 5.05 that you're quoting, were they banks?
Yes, they were. They were not one of the top 4, but a lot of banks are still carrying that government guarantee.
I know it's not ethical for you to tell me the name of the bank, so
No.
I'll just have to look on the website.
Correct. Yes, you can easily Google that by just typing in simple words like best term deposit rates, government guaranteed, and you will find that.
Good luck with that, Kevin, and thank you for kicking us off this morning. Nation's cash rate, 4.35%. What's the best rates out there that you've seen? How low can people get down with their mortgage? I reckon I'm on 5.85, 5.9. I should know. What's the best one around?
Yeah, I think if you've got a 5 in front of your mortgage right now, you're doing exceptionally well. Generally speaking, we're sitting around 6.29. I have seen some with 7s in front of them. It just depends on what kind of loans they are. But if you do have a 5 in front of your mortgage, you are doing very well.
Good. Let's go to Steve. Steve, hello. You're talking to Michelle.
Yeah, good morning, Michelle and Emily.
Good morning, Steve. How are you?
Yeah, pretty good. I'm not expecting a specific answer. This is just general guidance. I retired last year and got set up. Rolled everything over the super, did this and the other. And what's happening at the moment, I'm drawing down more from super than the minimum, and I'm accumulating money. And at the moment, I'm just sort of putting it into Vanguard ETFs in my own name. And I've spoken to the advisor. They're saying, no, reduce your drawdown, put everything into super. And I'm sort of sitting there thinking, but so these Vanguard things are going pretty well at the moment. And am I hurting myself by having them there and getting, I think we're up to 8% already, return just in about 8 months or 9 months?
Yeah, sure.
I'm just caught. I'm sort of trusting of the advisor, but I just don't understand, if you know what I mean.
Well, I'm glad to hear you're trusting of your advisor. That's good news. But in your super funds, you can still have access to those Vanguard funds, depending on your super fund, obviously. So if you are in an industry style fund, you'll probably find that you won't be able to have access to the Vanguards. But being in, say, a platform style superannuation fund or allocated pension, if that's what you've got full access to those vanguards, so you can actually still hold them in superannuation. And, that is the most tax-effective way to hold those funds, especially if you're in retirement mode. So it may be a good idea to have a chat to your advisor and see if he can or she can find a platform that can accommodate those Vanguard funds for you so you can still enjoy those ETF returns because, yes, they are doing exceptionally well at the moment.
Yeah, I mean, it is a platform fund I'm with. It's not an industry super, it's a private one.
Right. May I ask which one it is, Steve? If you don't want to say, that's fine.
I don't want to broadcast too much, just in case any misinterpreters just going the wrong way. But,
understood.
Yeah, I can tell you off air if it helps. But
sure.
But I'm just sort of looking at this from the point of view. Because I get a partial pension, so I can earn a certain amount of money tax free.
Yes.
As an earning.
Yes.
But the capital growth side, I guess,
yes.
would be taxed. So I'm not sure.
Absolutely. And if you do go to cash out those funds, if they are sitting outside of super, you must be mindful of the capital gains tax implications that will present. So if you can talk to your advisor about getting those funds into superannuation, you'll be very well placed.
Steve, thank you for the call. And the line's open if you've got a general financial question for Michelle Galvin, Director and Financial Advisor from Acorn Wealth on 133 693. 12 minutes to 10 on 3AW. Through until the 10 o'clock news, Michelle Galvin, Director and Financial Advisor from Acorn Wealth, is our guest, taking your calls. Nick, you're talking to Michelle.
Hello, Michelle. I'm a first-time caller, so I'm a little bit nervous.
Oh, that's all right, Nick. We're all nervous.
I'm in the fund that recently I've been told that it's been 2 years in a failed fund and it has to be transferred.
Right. Okay.
And I won't mention the company.
No.
And I'll have approximately, a $68,000 capital gains tax because of this transfer.
Oh,
and
yeah.
That's what I've been told. And I've complained about it, and they said that they can't do anything about it.
Okay, Nick, this might be a conversation we might need to have off air because that does sound like a very large amount of capital gains that you'll be hit with. So you can leave.
Yeah, Nick. Yeah, look, Nick, leave your details so that Michelle can talk to you a little bit further off air, as this sounds like one that needs some time with you. So what will happen now? You'll patch back to Lauren and leave your number so that Michelle can get in touch with you. And thank you for the call, Stephen. Your turn.
Oh, hi. Look, I'm ringing on behalf of my 80-year-old parents. They had a hobby farm of about 40 years. They missed out the capital gains cut-off, so I think it was about by 3 months.
Right.
They had to sell their property because of all these, ridiculous taxes by the stupid Premier. And they got their sale, and it was sold just a couple of months ago. It's a two-part question.
Sure.
They're 80. They've got no other funds, no super, nothing else. How much savings can they have as a couple before they lose all their pension? And when do they get to pay their capital gains? Because they couldn't pay the tax this year. They said they had to wait till next year.
Correct. Okay, so let's just break down the question. First of all, for capital gains, you must lodge the tax return first to determine what the actual capital gains will be, because no doubt there'll be some deductions against that for the any costs that were attributed to that property. So usually the capital gains tax is payable in May of the following year after lodging your tax return, thereabouts. So they do have a bit of time. In regards to your question about the pension, the upper limit you can have is just around, just over the 1 million. It's actually 1,045,000 before your pension is completely cut off.
Right.
The lower limit is 470,000. So I'm assuming they would already have more than that if they're on. Yeah. They
got just under 800 after paying the real estate agent. So
right.
Are you saying when they get down to 470, the pension starts creeping back? Is that how it works?
470 gives you the maximum age pension. And, every sort of dollar after that, you will lose a little bit of pension. But it's really, do they have financial advisors Steve?
No, they just spoke to Centrelink because they've been dealing with them, and they've got an accountant, and all they were told was, when you pay the capital gains tax next year, come back and tell us, and then we'll readjust things. Is that what you do? Or?
No, I would tend to get advice well before that, because no doubt they will have a healthcare card that they wouldn't want to jeopardise either. So there's a lot of planning that goes around something like that to enable them to still retain their pension and retain that healthcare card, which, for elderly couples, it's quite an important card to maintain.
So first step for Stephen, what would the first step be, do you think, Michelle?
Well, if you can find a financial advisor, or we can certainly help you with that, or if you know someone yourself, it's a good idea to put your parents in front of a financial advisor just to, prepare for that event and not be proactive and not reactive, is what I'm trying to say.
Stephen, if you want to leave your details for Michelle, we can connect you off air. Let's go to a break, 8 minutes to 10 on 3AW. It's 4.5 minutes to the 10 o'clock news on 3AW. Lou, you're talking to Michelle Galvin. Hello.
Hello. Thank you for taking my call. Hi. I'm just have a question about my super.
Sure.
I'm 63 and semi-retired, and I'm just wondering if I'm able to access like a $20,000 lump sum without any tax penalties or any other penalties.
Yeah, right, Lou. Sorry, I just missed it. Did you say you were retired?
Semi.
It's kind of one of those questions where it depends, and we may need to take this offline. In short, yes, but there is a no. It's kind of one of those situations. So if we can have a chat offline, that would be amazing, and I can just get a little bit more detail. I'm sure you don't want to disclose to the whole of Australia what's going on with your super and your age and all the rest of it. So let's take it offline and we'll have a chat.
Oh, lovely, Michelle. Thank you so much.
No worries.
Terrific, Lou. And we can see we've got your number there on the screen, so we'll pass that on to Michelle. Hello, John. Welcome to the program.
Oh, hello, Michelle.
Hi, John.
Hi. My question is, when you talk about assets, which is cut off for the pension,
sure,
the 455 or whatever, does that include superannuation?
It depends. So if you are under the pension age, then, well, you wouldn't be getting the pension. How silly of me. No, so yes, it does include superannuation, but there are different styles of superannuation. So there are annuities and all sorts of things that offer, discounts off that total value. Again, it's one of those other sort of questions that we'll need to take offline. But in short, yes, it does include your superannuation.
Okay, and so does income then, if you want to do part-time work and still get the pension, does income from superannuation count towards that? Or as in you draw down, or is it just wage earning there?
Income may be deemed depending on when you started your pension. So there are different dates. I don't need to tell you how complex the super system is, but we can certainly take this off air and I can give you all those dates and we can ascertain whether your earned income will be affected or not.
Okay, sure. All right, great. Thanks for that.
Thanks, John. Lovely to chat.
Yeah, good on you, John. And we've got your number there and we'll tuck it aside. Before we are away to the news, Michelle, what website have you got? Where can we find you and find out more information?
You can find me, yes, at www.acornwealth.com.au, and that's ACORNWEALTH.
And what was keeping you busy this year? What was the number one question you got from your clients?
Number one question was always around mortgage. Should I retire now? And when will the share market crash?
Oh. Did you just get out your crystal ball and just...
I did.
Oh, gee, if we all knew that, we'd all be rich. Now, the mortgages, again, refinancing was your number one tip. You've got some great ones for New Year's financial resolutions. I think you're back next week with me, so we can pick up on some of your other ones there.
Absolutely.
And in terms of your Christmas club... so should we be opening a high-interest savings account somewhere and squirreling that away way?
There are many, many forms of accounts that you can use, but a little bit each week goes a long way.
That's fantastic. Michelle Galvin is the Director and Financial Advisor of Acorn Wealth, was good enough to join us and will be back with us at 9:30 next Saturday. Right, let's go to the news. It's 10 o'clock on 3AW, and on the other side of that, we'll talk caravanning with the great John Spence from Prestige Jayco.
Hi, Glenn Robbins here.
And Dave O'Neill here, and we have a podcast called
Somehow Related,
where we get two topics and got to work out how they are related.
And they are somehow related. We go on a journey, we tell stories, we do reenactments, you learn facts, you learn things that you didn't know you already knew, and then you get an answer at the end.
We've got a new home on 9 Podcasts, so excited. New episodes every Tuesday. Tap the follow button wherever you get your podcasts and never miss an episode.
Somehow Related.